Welcome back to the Wall Street Podcast. Today we're diving deep into a recent Goldman Sachs research report. It's titled Tencent Holdings 0700 HK. Asia Leaders Conference 2025 Key Takeaways. Deep Moats with AI Empowering Growth by. Released September 4, 2025. It really digs into Tencent Chief Strategy Officer James Mitchell's presentation. We're talking AI, revenue, capital strategy. Our goal for you today, to pull out the key insights, the actionable stuff from this report so you can quickly understand Tencent's path and what it means for the market.
Absolutely. The report really underscores a significant shift, a re-architecture of Tencent's AI strategy. Their Hunyuan models, they're now basically state-of-the-art soda in China. They've closed the gap quite a bit with global leaders. And what's interesting are these new multimodal 3D models, like Hunyuan World Voyager 3D. They're ranking strongly and crucially being integrated across the board. Weixin, QQ browser, native apps. It's happening.
Right. And it seems like they're not just bolting AI on, it's more fundamental. They're using it to, well, turbocharge existing high-margin areas, gaming, marketing services, and it's backed by efficient AI capital spending, according to the report. For gaming specifically, that unique content portfolio they have, it acts as a kind of data source, right, for AI training, improving R&D, improving user experience. And look at many games sustained over 20% year-over-year growth. That's not trivial.
Exactly. That 20% is a solid proof point. And in marketing, there's this aggressive AI deployment. They're targeting what the report calls an under-monetized ad business, using vertical models, using very granular SESU-level data from mini shops, so specific product details. The aim is to really push up click-through rates, conversions. Then you have fintech, seeing stabilizing consumption trends, growth from cross-selling, like in consumer lending. And importantly, they seem disciplined on capital allocation. Those ongoing share buybacks signal confidence.
Okay, that phrase, unparalleled data moat, from the gaming side that really stands out. How exactly do these AI model advancements create that distinct competitive advantage for Tencent? What's the core of it?
Well, it's layered, I think. First, you have the tech itself, the Hunyuan models being soda in China, the strong multimodal rankings. That's the foundation. But the real differentiator, the moat aspect, comes from that huge, unique proprietary game portfolio. That generates just vast amounts of diverse data that others simply don't have access to. It feeds the AI training across their whole system. That's very, very hard for competitors to replicate.
Okay, so they have the data, they have the models. How does this actually translate into, well, revenue? Goldman Sachs highlights that under-monetized ad business.
Yeah.
How will AI specifically boost monetization there and maybe elsewhere?
Right. For ads, AI is the tool to fix that under-monetized issue directly. It allows for much, much finer analysis of user behavior combined with that specific product data, the SKU data, so ads become far more relevant, more effective. Higher conversions. Beyond ads, think about high-margin innovations. AI can facilitate things like customizable virtual items in games. That's a big revenue stream. And it supports smarter cross-selling in fintech, too. It's about diversifying and deepening how they make money.
Makes sense. So for investors listening, what are the key numbers from Goldman Sachs, the forecasts, and importantly, what are the risks we should keep an eye on?
Okay, forecasts first. Goldman Sachs is projecting 13% year-over-year revenue growth for 2025 and 18% EPS growth. Pretty healthy. They're maintaining a buy rating. The price target is HK $701 based on some of the parts, or SOTP valuation. That SOTP approach basically values each bit of Tencent's business and adds them up, reflecting that AI growth potential. But yes, risks. Key ones mentioned are intense competition in performance ads. That's a big one. Also, potential delays in game launches or maybe regulatory hurdles. And of course, the risk of slower than expected growth in fintech or their cloud business. You need to factor those in.
Right, those are definitely significant risks. Does the report suggest how Tencent might, cushion against these, especially that ad competition?
The report sort of implies the strategy itself is the mitigation, that deep moats with AI empowering growth idea. For ads, the bet is that leveraging their unique data and the advanced AI will let them simply create better, more efficient targeting, outcompeting others. For game delays, well, their huge existing library and diverse portfolio helps absorb some shock. And ongoing R&D investment is the plan for staying ahead in fintech and cloud.
Okay, stepping back a bit. For everyone listening on Wall Street, how might these AI strategies from a giant like Tencent ripple outwards? What broader market shifts or consumer behavior changes might we see?
I think it signals a move towards much more personalized, much more efficient digital interactions across the board. Think about e-commerce feeling more intuitive, gaming feeling more tailored just for you, that kind of thing. For the market, this could mean deeper user engagement, potentially higher lifetime value or monetization per user for platforms that get it right, and definitely a shifting competitive landscape. Who has the best AI, the best data? That becomes even more critical globally. For you, it means watching how AI really impacts customer loyalty and value across the whole digital space.
So as AI keeps reshaping these industries, Tencent's approach is certainly one to watch. It leads to a final thought, perhaps. If AI can make our digital lives this much more efficient, this personalized, what entirely new kinds of digital value or maybe even new online communities could emerge? Things we perhaps can't even quite imagine today. Something to consider for the future of tech and investment.